This is my first video back in over a month, but I'm excited to start making videos again. And there's two videos I want to make today. One is I want to do a review of what happened on Friday and talk about the market, do a market recap of NFP employment data, how you could have possibly taken a 2.5 to 1 risk reward trade. And then also, I want to do a weekly outlook for this week and talk about where I think the market could be headed, and just give an outlook for key levels and what might be going on. With that, hopefully you find this video helpful. Hopefully you can possibly learn something from these videos. I've been doing a lot better with my trading recently. I took a break for a while because I was still trying to figure out at the time if I wanted to be trading more actual like options with specific stocks, which is what I was doing for a while, and I'd be doing pretty well with it, and then and it's harder when it's options, but like I started to really get a lot better with the actual daily bias, the actual day trading stuff. I've been doing really well. I've gone 9 for 13 in my last 13 trades, and I've gotten 200% average return on all of them. So I'm just absolutely killing it, doing a lot better. So I feel like it's about time that I should start making some videos again. And then specifically with these videos, talk about daily bias, market outlook for each day, do a market recap, and then also do a weekly outlook. So hopefully you find this video helpful. Let's just start looking at what's going on. So this video is specifically going to be the market market recap for Friday. So I'm gonna pop out another tab here so I can pull up a different chart if I need to. Sweet. Okay. So let's talk about Friday. So Friday was non-farm payroll, which means there was employment data that came out at 8:30 a.m. Eastern Time, which is 6:30 a.m. where I live here in Idaho. And so, if I pull up the high time frame chart, I had been bullish all week because what happened on the higher time frame from what I analyzed was if you take the midpoint of this order block here, it's called the mean threshold. You can see it got a perfect reaction. Once it got a perfect reaction off of that, let's see, not quite as perfect here. I guess if you measure it like that, it was pretty perfect. But when it got a perfect reaction, and then got displacement out of it, that kind of gave me my daily bias for the week that it was gonna go take out this low resistance liquidity, and I instantly thought, oh, okay, well, my bias is bullish. And so actually I had a trade that I was gonna take. It was 1 to 12 risk to reward all the way to the all-time highs, and I would have taken it, but I got stopped out here at 3 to 1 risk to reward because I moved my stop up. If I had a little bit more conviction in myself, then I would have been able to hold this trade all the way up to all-time highs and get a 12 to 1 risk to reward. But you know, it's hindsight. It is what it is. Let's take a look at actually what happened on Friday. So we were ranging up above all-time highs, and we had taken out the clear target. This was the clear target. This was the drawn liquidity. So going into the day, if you look at the daily chart, we closed the daily candle with a ton of momentum on Wednesday. I thought that could continue, but we were just gonna go off of what the information was telling us. So we went into the day kind of with a little bit like went into the day with hesitation. We weren't gonna trade before news unless we saw something that was an insane opportunity. So we didn't take a trade. Right. So news came out 8:30, immediately dropped us. Right, and so I'm just watching the chart. Right, I'm watching the 4-hour gap. So I was watching this 4-hour gap. We went right through this 4-hour gap. Here, let me show you. We went right through this 4-hour gap, and we kept going down. And we went and found we found support in this 2-hour gap. Okay, so I was watching this as it was happening. So if you zoom out, I was watching this as it was happening. And so then I saw us come in, fill this 2-hour gap, right? And then you can see here is a 1 minute for value gap. Once that inversed, that's actually where I entered. And in hindsight, I probably should have done like a 30-second or 15-second inverse, because this was SMT right here. This was SMT at the low. So SMT, and this, the bottom of the 2-hour order block was also, this is a daily order block. So if I pull out to the daily, you can see how like it retested the top of this daily order block. For like, it got close to it, and then on a NQ, not on NAS 100, it actually did come in and tap into this daily order block. So that gave me additional confluence. And so these high time frame levels are key. And so I entered there. I entered here. Initially, I think my stop was down here, but I moved it up to this low. And then the target would have been this data wick. I was targeting past the data wick, but I was willing to move my stop up. And it's just 4.75, but like I said, my stop initially was at the low. So this would be like a 3-to-1. What happened for me is I saw price move up, take out this high, then take it out again, and I start to get stagnant, and I was like, okay, I'm putting my stop at this low. And then I got stopped out. So basically about the same. Like, for me, it was like 2.7-to-1, and it was a great trade. So high time frame levels are key. But I could have got a better risk reward trade if I entered off a 30 or 15-second inverse down at the low. And yeah, with the SMT, with the 2-hour gap getting filled, and with the daily order block, I feel like that would be enough conviction for you to enter there. Sweet. So that is it for this video. I will see you when I record my weekly outlook video. Alright, talk to you later.